Hey everyone, welcome back to the Chapple Show. Today we're talking about stock market investing versus real estate investing. So let's get started. So full disclosure here, the channel Financial Education made a video comparing stocks and real estate. He heavily favored stocks, which is okay. A lot of his points were true. I just thought I'd give a more a balanced comparison between the two, and I'll just kind of explain which one do I think would be best for you and best for most people. So let's get started here. Stocks versus real estate. So we're going to just do some pros and cons here. Very first thing, the probably one of the biggest pros about stocks is very little capital. Little capital. Meaning that you don't need a lot of money to start investing in stocks. I always just recommend $500 minimum. That's generally what I would say per trade. Saying that you can go into the stock market with $15 if you really wanted to, or I guess the minimum might be about 20 or 25. But you don't really need a lot of money to start trading in stocks. Meanwhile, in real estate, a big disadvantage is that you need lots of capital. Lots of capital. You need, in some areas you need about $10,000 down payment or $5,000. Some areas like mine needed about $200,000, which is a lot. And I know in Beverly Hills it's $1 million down. So you need a lot of money to start doing some real estate investing. That's probably the biggest difference for young people, is that a lot of young people just don't have the capital. You don't have the money to save up, or you don't have the money saved up to actually invest in real estate, and that's okay. You can jump into a real estate investment trust, or a REIT, that's what it's called, or you can jump into like a realty shares. You can invest in real estate, but it's essentially you're investing in stocks, except you get to see the building. I guess that's the difference. We're going to move on here. Stocks, liquid. They are very liquid. And real estate is very, static is a good word. I don't know what the opposite of liquid is. But what do I mean by liquid is that it is really easy to jump into stocks and to jump out of stocks. If you wanted to sell a stock, you can pretty much sell it whenever the hell you want to. You just click a button and someone's going to buy it within a couple days, usually. Real estate, you got to go through the whole process. You got to get an agent, unless you are an agent. Or you got to post on the MLS sometimes. You got to deal with buyers and offers coming in and documents. It takes weeks, months. Sometimes your place doesn't sell. It depends. If your place is a shithole and no one wants to buy there, you might not be able to sell it. So it's more of a static investment. Once you invest in it, it's tough getting out. So that's the thing. And also it's tough getting in. Like, it requires a bigger time commitment than stocks here. So Jeremy did make this point here on Financial Education channel that he said a lot of the times you can make 50 to 100% on stocks in a year. Completely true. So there's generally speaking, you can get a higher return per year, but I would also consider that there's a lot more risk that goes along with stocks. Companies go bankrupt all the time. Housing, that you can lose a lot of value in a year, but you won't lose the house. It won't go bankrupt. The value won't go to zero unless you live in Detroit. So stab at Detroit there. Higher return per year potential. So there's no guarantee. The average return on investment per year on the S&P 500 ranges from 6 to 15%. But there's potentially a higher return for the most part. Stocks can go up 500%, 100%, 200%. But so can real estate. Real estate still has a higher return. It's just I don't think that most people realize that the returns come in select areas. Those high returns, those 50 to 100% returns per year. A large portion of the returns come from like tech companies. In stocks and in real estate, my parents' house. My parents' house last year had a value of $1.1 million, and it's right now worth about $2 million. 1 year. So when people think you can't get a massive return in 1 year, you can. I've talked about the housing market right now in Toronto. You can get a good return. But it's really unfair to young people. That's in the video. So when Jeremy said that you can't get 50 to 100% return in real estate, I see it all the time in hot markets. We saw it in Vancouver last year, Toronto, New York, lots of parts of California, San Francisco. Sure, in the flyover states, not so much. But generally along the coast, we see Miami gets hot sometimes. But anyways, we're gonna keep moving on here. So we're gonna talk about, so there's more, I guess I will say, there's more options of how to invest here. Well, you can actually get stock options if you want to. You can get stock options in stocks. You can short sell companies if you want to. I think I wrote that one down here, but we'll write that one down here. You can short sell. There's lots of different ways that you can invest in stocks. I think that there's about 6 or 8 different ways. I have the strategy of just go pick up dividends, and that's worked out for me, and it's worked out for a lot of people. So actually 70% of the returns in the stock market have come from dividends. So if you're betting on a stock and hope that it goes up in value, cross your fingers. So yeah, and in real estate, you simply just don't have as many options. So generally your options in real estate is you can buy a place and flip it. That's essentially like speculating in stocks. You buy a place, you fix it up, and hopefully sell it for a $10,000 to $100,000 profit, or if you're really big, $1 million profit. And then there's the long-term strategy, which is you buy a place and rent it out. And someone pays for the mortgage and you rent it out. And that's been proven to be the most successful one. And there's also just buying a place, and I wouldn't consider this investing, but buying a place and just living in it. And hopefully that it goes up in value. Worked out for my parents making $1 million on their investment last year, but it hasn't really worked out for most people. Most people, when they buy a home, they think it's a good investment. A home is more of a liability if you live in it. It's more of it can be an investment. Like if, for example, in my next place, I want my house to have a giant office and a giant studio so that I don't have to drive to work here every day. That's a little bit more of an investment. But generally speaking, if you buy a place and live in it, it's not an investment. So we're going to move on here. Let's see some more stock stuff. Exact value. So this is actually kind of, I'll explain this right here before I forget. Exact value, rough value, and then I'm just so I remember here. Give me 1 second here. So the exact value. So you know the exact value that you can buy stock for, and the exact value to within a few percentage points that you can sell a stock for. It's a positive. I mean, you get to know the exact value. Real estate, it's rough value, and that kind of leads to the next point here. The next point here is something which I like to call negotiations. So, and this is, we'll just say no negotiations. How about that? So you can potentially, if your home is worth $100,000 and someone puts in a $100,000 offer, you can negotiate with them. You can negotiate with the buyer and seller. In the stock market, you can't. You have a broker goes out, buy it for this price, sell it for this price. In real estate, you can be like, okay, I'll sell it if you need to give me an extra 20 grand. Or if you're the buyer, you can be like, I want $10,000 less, and I also want this, this, and this fixed. And you can't do that in stocks. You don't really have much control. And that might be the second biggest point I make here, is control. You have absolutely no control of the stock market. Zero. And you have some control here. So let's just say you buy a stock like Apple. You have no control over the company. You're an investor, but you own 0.0001% of it. You don't have control in what the company does. You don't have control of the profits. If the company fails, if the company takes off, you don't. You're just guessing for the most part and hoping that they pay you back one day. That's it. And for real estate, you don't have a lot of control either for the most part of the market value, but you have some control. So for example, like I mentioned negotiations, like you can negotiate the original price. Yes, that is completely true. A few other things, you can control the value, like you can fix up the house if you really want to and make the value go up. You can turn it into a shit box for some reason, make the value go down. But the big thing here is renting. You can control how much it rents for the most part. One of the reasons why people liked me as a real estate agent was that I was one of the best online marketers possible. And young people, and I was the youngest real estate agent in the district, essentially. And so I was the only one that really used the internet really well. And so I remember, like I've told this story once before, is that I was able to get a higher rate for a commercial property because I was personally able to get a lot of people interested in it through some online ads. And so the person originally wanted, I actually forget how much the original rent was, like they wanted $3,200 for it or something per month, and I ended up getting them $38. That's what the people offered. So, I mean, you have some control. You have some control. You can market your property, get higher rents if you're good at it. And that is one of the key points here, which I personally like. You guys know I'm a control freak. I like to be able to control where all my payments go, what my expenses are. That's why one of the reasons I don't like debt. I don't like someone else determining that I have to pay them a few $100s every single month for something. I like to have full control over everything I do. I don't like having too many partners or anything like that. I don't like having obligations, anything like that. I like having complete control over my business. And if you are one of those people, real estate's gonna be the way to go. Because stock market, you're just guessing. Now, saying that, you can be a good guesser. Like me, you guys know my strategy. Invest in a lot of blue chip stocks, and you're gonna get a 6% return, 4 to 6 to 8% return every single year. But you have absolutely no control whether that company goes to zero. At the end of the day, that choice is up to you, the control thing. So we got some more here. Hopefully these fit on camera. This is hands off. And this is something that for a lot of people is big. I know one of my partners that I'm going in with for real estate, he doesn't like stocks because they're too hands off, because he doesn't have that control. You go in, you buy, you click something, you buy it, and then it just ends up in your portfolio a day or two later, or if you're a day trader in minutes or seconds. And if you're a hands-on person, like you like to see the place. You like to be able to drive, like one of my favorite things is going to drive around the neighborhoods and seeing potential properties. And you have control. You get to fix the place up. It's more of hands-on, active investment, I guess, in a way. And a lot of people don't like that, which that could be a negative for some people. I mean, I would say hands-on is probably a negative for most people. Hands-off, you can buy a stock and not have to worry about it. If you invest well, hands-on, you might have to fix some stuff up on a property. That happens about once a month. You're going to have to go in and you're going to get a call or an email once a month saying a light goes out or a light breaks, the wall breaks, and it's more hands-on. So that's totally up to you. I mean, one of the things why I actually do like real estate investing is because I want to be able to see my investment. Like I want to be able to be like, drive by and be like, oh yeah, I own that place. I just like that. I'm one of those kinds of people in stocks that's just like, oh yeah, I own Apple. I own that 0.0001%. Pretty sweet. I get their quarterly financial reports every 4 months. It's pretty sweet. That's another point there. All right, so we're going to move on to the biggest positive for real estate, and this is the thing that the financial education video that inspired this one. By the way, that video was great. I don't want to rip on it. Like pretty much every single one of his points was spot on, except for this one. So this one was, we're going to talk a little bit about taxes. You guys know, if you've watched my other videos, about the massive tax breaks that you get in real estate. And I've told you that once you build up a portfolio of a few properties, you can make 6 figures. I guess it would be about 4 to 5 properties here at least. You can make 6 figures and not have to pay any taxes. 6 figures profit and not have to pay taxes. So in stocks here, but stocks you get a little bit of tax breaks too. I mean, but they're just, compared to real estate, they're low to medium tax breaks. So low to medium tax breaks. So in Canada, the rules for taxes, they're probably different than the United States, but for capital gains, so if you buy a stock for $100 and sell it for $200, you make a $100 profit. Now in Canada, only $50 of the $100 is taxable. So the $50 is taxed and is taxed at whatever your personal income tax rate is. Dividends, on the other hand, there's like 8 different tax brackets and rates, and there's non-eligible and eligible and all that kind of stuff. And so they can range from like 1% to 45%. So those can range drastically. But generally speaking, I mean, stocks give you tax breaks. I'm not ignoring that point. It's important. I mean, dividends, especially if you're not making a lot of money, dividends you get a decent tax break on those, and capital gains. So, yeah. But at the end of the day, you're still getting taxed. I believe in the United States, it's closer to 15 to 18%. For the average stock investor. In Canada, it's more about 25%. So again, still good. But here's the thing, in real estate, there's these things like, I'll just do the sub bracket here. I'm not going to go visit my how to legally pay no taxes video in real estate, but there's things in Canada called CCA, capital cost allowance, which is also called depreciation. And I went over this with my tax guy, and he said that, yeah, you can deduct 4% of the property's value you can deduct 4% of the property's value in terms of take it off your business profits, business income, whatever. You can write it as an expense, as depreciation. So if you were to make, this is just so rough example, just go watch that video, but if a property's value is $1 million, you get $40,000 as a tax break per year. Now it goes down a little bit every year. It goes from 40,000 to like 39,500 to 39,200. It goes down every single year, but it's 40 grand you pretty much get in a tax break every year for $1 million property. And so, meaning that if you're to make a 40 grand profit and you haven't taken depreciation, you can make $40,000 and not pay taxes. Kind of cool. And so go watch Robert Kiyosaki too. Robert Kiyosaki writes in one of his books and on a few YouTube videos, he talks about how like he makes millions of dollars and doesn't pay taxes. He's had to file, but he doesn't pay taxes because he owns so much property and depreciation happens every year. And there's also other things too in real estate, like there's a bunch of other expenses too. I'm not going to get into that, but pretty much you can write off the interest of the loan that you take out of the mortgage. You can write that off. So that's tens of thousands of dollars per year or more. And that just all adds up. It all adds up. So that's something for you guys all to think about. If you build up a real estate portfolio, you may not have to pay taxes in the future. You're going to have to talk it over with a local tax accountant or something like that in your area. But you might not have to pay any taxes. So it's something for you guys to think about. Grant Cardone says this too, that he makes millions of dollars every single year, and from real estate, he pays from 5 to 15% on his profits. 5 to 15%. And this guy's worth almost $500 million we're talking about here. So that's, again, think about it. Think about it, guys. That's the biggest advantage, so I wanted to stress that point. Let's see here. Control. Oh yeah, so I guess I kind of went over this too. It has to do with control, but in terms of investment properties, those very rarely run into like a natural disaster where you lose everything. Sure, a tenant may fuck it up. Sure, it might burn down, but you get insurance on that. I guess that's another thing too, is that you can get insurance. That's the other thing too. If bad things happen, you can get insurance on here. And you kind of have to. Insurance. So if your investment goes belly up and it gets destroyed or the value goes to zero, whatever, a fire breaks out, a tornado comes through, you have insurance for that here. You got nothing. If a company goes bankrupt, you got zero. You get zero. No protection. Always wear protection, kids. Oh, that is a bad joke. Okay. We're going to move on here to stocks. This can be a positive or a negative here. It's totally up to you guys. It's probably a positive for most people, is that dealing with charts and news, largely. Charts, news, and websites, people like me, whatever. So a large portion of your investment and of actually going through the investment of like buying a stock, it comes from just looking at charts. And whatever you hear in the news and what you hear from people like me, it's really, you don't really have to deal with, I guess I'll write the other point over here. You don't have to deal with people like you do in real estate. Now, this can be a negative or a positive. It's up to you guys, dealing with people. So I will tell you the negative and positive that I've seen in dealing with people in real estate. So the negatives are obviously stupid tenants. tenants, and a lot of agents are dickheads. But saying that, I've met a lot of people through real estate that I've built connections with. Like, I've found an investment partner through real estate. And I've found a lot of friends and people that I can potentially work with in the future. Actually, I found 2 people that I'm almost 100% sure I'm going to work with in the future through real estate. Like an agent and I guess not a developer, but someone who fixes up places. And I know I'm going to use them in the future. I developed good contacts, and they're going to help with my investments in the future. So that's something that you guys should think about. You get to deal with people and network over here. That can be a big negative, though. Dealing with tenants and stupid people, that would suck. Over here, you just deal with charts and news. You don't have to deal with stupid people. So that's something that you guys got to think about. Oh yeah, I guess one of the biggest drawbacks for real estate is location. And over here, we're going to go no location. So if you're investing in real estate, you have 2 options. You can either invest far away and get a property management team, or you have to invest nearby. That's your 2 scenarios. So if you are in a flyover state, for example, where it's tough to get into real estate, or actually it's easy to get into real estate, it's tough to make a lot of money in real estate if you're in a flyover state. So location, that is very important. If you don't have a solid rental market nearby, it might not be worth even getting into. And you can't exactly just fly to New York or whatever, fly to California, buy a place, and fly back unless you have a lot of money. And that goes back to the capital issue. And stocks, you can invest in any country, any company, different fields. You can invest in anything you want, whenever you want. There's more fees for investing internationally. But you get to invest in, I guess that's the other thing too. The last thing is I think I talked about this, diversity. The diversity of stocks. So it's just you get to invest in whatever you want, whatever field. If you have a gut feel that tech's going to take off, that one company's going to take off, you can invest in it. If you have a gut feel that healthcare is going to take off, go for it. If it's oil, go for it. Gold, go for it. But real estate, you're kind of stuck. You're stuck to. There's limited options. There's apartment buildings, retirement homes, multifamily homes, condos, stuff like that. There's only about 10 or so options. There's farm, there's agricultural, there's farmland, there's actual vacant land. So there's only a limited amount of options. There's about 10 or so options in real estate that you can go into. There's only about 2 that make you money. But there's hundreds of thousands in stocks. So again, that's something for actually about hundreds of thousands if you include all the markets, right? I'm not going to get into that right now. So I think that's kind of all the points that I wanted to say here. Is there anything that I missed? I feel like I covered a lot in this video, and my voice is getting really hoarse right now just talking. So did I cover everything? Is everything okay? What do you guys think? What would you guys prefer to invest in? I mean, I'm going to kind of wrap this up here. So conclusion for stocks, easy to get in and out. You build a portfolio, I guess. Many different investing routes that you can take, lots of diversity, very hands-off. You don't have to deal with people. You don't have a lot of control. Tax breaks are okay. You work by yourself 90% of the time. In real estate, it's hard to get in and out. It's very static, but you build a business. You get massive tax breaks. You have some control over the property. You get to work with others. I think that's kind of the main points here. So what would I recommend you get into? For the vast majority of people, it's going to be stocks. And it's simply because of the first 2 points I said. It's really easy to get in and doesn't require a lot of money. That's the reason why most people go stocks. Real estate requires a lot of, actually I didn't even mention this. A negative is that you need credit. You know what? Thank God I did this summary. You need credit and a loan. So you're going to have to deal with banks too, which sucks. And you're going to have to go through legal stuff too, like transaction fees are thousands of dollars. People don't realize that. There's the land transfer tax, there's the lawyer fees, there's appraisal if you're selling and all that kind of stuff. There's inspection, there's all that kind of stuff. There's a bunch of fees that go into real estate too. You need good credit, so you're going to have to deal with banks and you're going to have to be okay with paying back loans most of the time. But usually that's good because you can write it off as taxes later. So it's something to think about. Just, I think for most people, like 80% of people just in general, it's better to go stocks. And for about 99% of young people under the age of 25, it's better to go stocks. Now, for me personally, stocks have treated me very well over the past I've been investing 5.5 years now. Jesus. Stocks have been treating me very well for the past 5.5 years. It's been treating everyone well for the past 5.5 years. Real estate is where I'm going to next because that's my interest and I want tax breaks because I don't want to be paying more in taxes than most people my age make in a year. So that's one of the reasons I'm going into it. Plus I have experience in it. But I would say that the largest reason to get into real estate, if you're a hands-on person, you have a lot of money, which, luckily I've saved up pretty well now. So I'm actually probably going to get a property as soon as the bank can approve me for a loan. By the way, here's what's dumb. My credit's 800 now, right? My credit score is 800. They're giving me a $10,000 credit limit per month on my card. And yet, they won't even talk to me about a mortgage yet. That bothers me a little bit. I understand it because all my income's been taking off in the past year. But still, I've had a good income when I was 18 and 19 and 20 when I had the corporate job too. That's a little bit frustrating. That's see, credit. All goes back to credit here. It's tough to get into, guys, for young people. So young people, stick to stocks. But as you get older, it's worth looking into. If you want a business and you don't really want to work for, here's another thing too. Just some advice. It's not a positive or negative. Generally, if you want to build a business from your investments, real estate's the way to go. And the cool thing about real estate is that once you have proven that you can properly invest in a property, it is a lot easier to keep borrowing money from banks. Like Grant Cardone, he talks about this all the time. It's so easy for him. If he goes up to any bank that he chooses and asks for $5 million for a property, they're going to say yes because he's proven to give them a full payment and then some in return. So real estate's more about building a business. And if you want your investments to kind of eventually become your job and your life, you want to lean a little more this way. But if you want to just invest in stocks, I think it's better for people that have a job or have another business which is their main source of income, and they just want to invest their money and get 6 to 10 to 15% return, or whatever that amount might be. So this is good if you don't want your investment to be your main source of income, I guess. Real estate is yes. So that's another thing to think about. So that's going to kind of wrap it all up here. Now I know that the vast majority of people watching this can't go into real estate. I have actually, though, not true. I've gotten lots of messages, especially in the past few months. I looked through some of them. I'm sorry, guys. I have hundreds and hundreds and hundreds every month now. I can't go through all of them. But I got a lot of people 27 to 30 years old saying, where should I invest in real estate? And how do I invest in it? And property management and all that. And so that's kind of cool. Some of you are going to be investing in real estate, but I know most of you are going to end up here, which is good. Both of which are good investments if you know what you're doing. Saying that, you can fuck up in both of these. I guess that's the other thing I want to mention too, is that if you know what you're doing, both of these are good. If you don't know what you're doing, stay away from both too. But if you're watching this, you know what you're doing. So anyways, that's going to wrap it up. My voice is dead. I'd like to thank you very much for watching. Leave a comment and tweet at me. Which one do you prefer, stocks or real estate? And if, you know what, actually a better question is, if you had $20,000 and could invest in either one of these, that would make it a little more fair. Because I know that most of you are going to comment saying you don't have $20,000 to invest. That's okay. So that's why most people here. But if you had 20 grand, which way would you go? Would you want the more hands-off or hands-on? A lot of people on the internet, probably hands-off, probably want stocks. If you're more like me, probably over here. So which one? And did I miss any points too? I think I covered a lot. This is going to be a long video. So that's it. Did I miss anything? Leave a comment, tweet at me, all that kind of stuff. So I'd like to thank you very much for watching. You are all very beautiful people. I'll see you guys in the next video. Da, da, da.